All right, welcome back to another backtesting session. This is episode 11. I'm investigating January in particular here. I want to try to find out, is January worth trading? Because on NQ futures, at least, it's notorious for being low volume. A couple of my mentors have suggested avoiding it, or at least trading it very conservatively or with an evaluation account. And the one January I have traded, which was 2025, I didn't do great in it. So I'm trying to figure out, what should I be doing in January for me? Now, in the other videos, I've already back tested the first week of 3 different years. So I'm kind of going week by week to be able to compare the weeks. And as we can see here, I'll show you in these different sessions. So here was this first week of 2022, break even with one trade. This first week of 2023, I was break even with 2 trades. I believe there were 2 break evens, or no, 1 trade right there. 1 trade break even. And then here in 2024, I was down 1 R. And then in my 2025 backtesting session, I skipped January altogether when I started it, just because in my head I went, well, January sucks, so I'm not going to even backtest it. And then in hindsight, I realized with January coming up and is currently, this is the first week of January now, I wanted to know, am I going to be sitting on my hands for the next month? What should I be doing? So I stopped this backtesting session here and moved on to backtesting just January's. Now, the other thing you'll notice is I changed my account balance from 50K to 800K. And the only difference here is this backtesting session, I wanted to replicate like the risk on I would see on my actual charts, which was 250 per trade. Whereas these accounts, these backtesting sessions, what I wanted to experience was seeing the actual amount of my accounts copy traded. So I have 2 sets of accounts. One account is like on hold, just in case I blow up a whole pile of accounts. But the other set is what I would be trading when all the copy trading is all set up, and that's a balance of 800,000, which means I'd be risking 2,000 per trade, making 6,000 per trade on a winner. And I wanted to just maybe stretch my psychology a little bit by seeing those larger numbers on the screen, which I got to test here in this first session with, a negative $2,000 trade. It didn't impact me a ton, so I was pretty stoked about that. So I use TradeZella for backtesting. It's fantastic backtesting software. It's as robust as some of the other ones I've tested, like FX Replay. But what's great about TradeZella is on top of backtesting, it gives you journaling and software and data, which FX Replay doesn't. So if you're interested in backtesting or trade journaling, connects to all your accounts and syncs automatically, there's a link to TradeZella below. Also, if you want to come hang out with me in my free trading Discord, you can ask me questions, come hang out, share trades, and join a very tight-knit group of like-minded dads trading NQ futures. Links below. I'd love to have you. So I think with that said, we can dive on in. So let's go to the charts. What are we going to do? We're going to do 2024. The second week of 2024 is what we're going to be doing. So let's go back into this session, and I'll get my face hid so I don't hide any of the screen. Just a second. All right, there we go. All right. So let's start off just looking at NQ on the higher time frames. Okay, so what we can see here is NQ has retraced back. So step back just a little bit. So we're just, looks like we're taking all-time highs on NQ. And we do internal to external. So overall price is bullish. We had a retracement, which is back to internal range liquidity, these fair value gaps. We expanded to external range liquidity, took the all-time high, and now we're doing a retracement back into this fair value gap. So we just expect bullish expansion. I don't short all-time highs. ICT teaches not to short all-time highs. We don't short all-time highs until we get some more confirmation. We do have, this weekly fair value gap right here, it's tapping into. So right there, looks good. And we can take a look at ES, similar kind of thing. Looks like it took the all-time high and it's retracing back in to internal range, and YM. So they're all synced up on the weekly. All-time high has been taken. Looks like NQ is the weakest asset. YM is the strongest asset. Hasn't retraced very far. So let's go back to NQ on the daily. I need to make sure I'm on the right day. So Thursday, Friday. So we need to go to the next day session, which is then Friday closes, Monday opens, which by the way, let's look at the calendar for the week. So 2024, right? Week of the 7th, right? So no news Monday, Tuesday, Wednesday. We do have core unemployment claims, core CPI. We do have core PPI Friday. So nothing that's going to impact my trading sessions other than Monday is no news Monday, which is going to be a little lower probability of a Monday. So keep that in mind. All right, so above we have retracement back into what is probably a new week opening gap. No, it's just a volume imbalance right there. So that makes sense for a retracement to potentially reverse here. Do we have any daily SMT? So we do have daily SMT, bullish SMT. And zooming into the 4-hour, let's see what we can see. So I like to look at the 2 a.m. candle, see what it did. So the 2 a.m. here kind of didn't do anything significant. It's just a little candle that didn't sweep any liquidity. But what we can see is the 6 p.m. candle, it did take major liquidity. So relative equal highs up here. We do have 4-hour bullish SMT. So we can see right there, bullish SMT. And I don't mark things on the charts when I'm back testing. I just kind of keep them in mind and try to toggle around a lot from the different time frames once I see my model. So the 1 hour has liquidity below the 1 hour. So the order flow on the 1 hour is bearish and consolidating. There was a change in state of delivery right here, and it kind of keeps retesting it. So that looks a little bearish to me. The 4 hour is obviously in a downtrend with no confirmed change in state of delivery, which would be a close above this candle right there. So order flow is bearish on the 1 hour, 4 hour, and lower. Well, I don't know about lower, but I wouldn't go against them very easily. Zooming into the 15-minute chart, let's see what we got here. We have the midnight open, Sunday, Monday, right there. So it looks like London did take Asia's low, and it formed a breaker. So I like to see London form a breaker, like a bullish breaker here, in conjunction with the midnight open. That is one clue I look for bullish continuation, and maybe suggesting we might not come back and retest the midnight open. Let's see here. Let's add on the 930. Okay, 930. And let's start clicking. So I don't really know what to expect for the second week in January. I pretty much knew the first week would be dicey, but being the first week of January and NFP week. This week here, I don't know. I really don't. I mean, I'm expecting lower probability conditions. I'm expecting more losing than winning trades. But I really don't know what the outcome will be. So just kind of taking a look here, we see a volume imbalance right there. See these volume imbalances, these tailless candles, 1, 2, 3, 4. When we see that many volume imbalances and volume imbalance and tailless candles, that tells me that that's how we can identify low volume. So already I'm getting signatures on the 1 minute that are telling me, this might not be super amazing price action, but let's start clicking. So 9 o'clock, just see what happens. Click forward to 9:30. Looks like 9 a.m. is expanding a little bit. Usually I want to see pre-9:30 consolidate. So let's see what happens. So here's 9:30 open. Okay, just one-sided expansion. Okay, continuing to expand. Okay. So we're outside of the 920 to 940 macro. Next trading opportunity for me is going to be right about the 950 macro. Price is continuing to expand. And this is common for no news days to just expand. Kind of just prices just floating upwards. All right, 11 o'clock hour. So really, I'm curious, the 10 o'clock hour, 9. So here's the 10 o'clock candle right there. So a little tiny retracement for that 10 o'clock, 1 hour, 4 hour candle changeover. So I'm looking for inversions right there. Oh, I didn't even see that until just now. And breakers. So there could have been a short. Could have been. So here's a 4 hour gap. We'll put them all up side by side. So here we have some bearish SMT at a 1 hour, 4 hour fair value gap. However, this 4 hour candle closed bullishly, but I could see it, here's this giant imbalance below. It could want to come back down and rebalance into there. So that's possible before continuing. And then YM is not following suit at the moment. YM is tapping into this volume imbalance. So, all right, let's go back to NQ. Where is it? And I missed it already. That was 1 minute outside of my macro. I would have probably done it. Or what I do take trades that are 1 or 2 minutes outside of the macro when they look really good. Honestly, that doesn't look too bad. We do have a local SMT as well. So nothing to do but tape read this, obviously. So here I probably would have marketed in on this candle as opposed to a limit order. And I would have set my stop loss just on the other side of that, targeting 3R, roughly there, which is beautiful. So here's these equal lows right there. So let's see what happens. And we'd be targeting the AM buyers that are in profit. All right, looks like I'll probably stop out. So here, what I like is it's building trend line liquidity right down in here. But who knows? Or actually, shoot, there's more than 1R. I would have been break even on this trade because it expanded away and I would have been tapped out of break even. So my rule is when it gets to 1R, expands away and gets to 1R, I go break even. So I'd be out of this trade no matter what. Let's see what it does. It just goes sideways and would have stopped me out right there. So there we go. Either way, coming into the 12 o'clock hour where I take my break from trading and pretty much done. So continued expansion, one-sided delivery. Let's zoom out. Let's go to the PM session. But I would have been fine with that short. There we go. All right, 15-minute chart. Boom, boom, boom. 12:30, 12:45, 1. So I'll zoom in back to the 1 minute. Let's see what the lunch session looks like. So here's 12 o'clock, 1 o'clock. So here's our lunch session. And let's start clicking. As I was saying, I look for inversions and breakers, but I want to see an inversion that's pretty noticeable. So like if this inversion right here, this gap inverted, it will be too small for me. And it hasn't taken liquidity yet, but. And it's just consolidating, so. All right, so here we are, 130. Coming into 230. Not really feeling like there's going to be much on this day. All right, so looks like just a completely, ooh, right there. 3 o'clock. What I don't like is I'd have a tough time shorting this bullish of price action. So there is a short. I'm not even going to look for any confirmations until, or what I'm trying to say is I just wouldn't short it. So even let's say it was, if this is a winning trade, I'll go back and so we got two gaps. There's a volume imbalance. I'd probably give it a little bit of room for that volume imbalance right there. If this ends up being a winning trade, I'll go back and figure out if it's an actual valid trade. But I wouldn't short this. So it's a losing trade. Let's see what it does, because maybe it just came back sideways. So yeah, it's a losing trade. So all right, so there's the end of this day. Let's see. I mean, so what we want to look at is a couple of things. What's price action look like? Was it a reasonable day to trade? And what did my model do? So this is one stage delivery. There was zero reversal to get in on this entire day. Price just floated higher, which is typical for no news days and especially no news Mondays. I did not have a bullish model to get in alignment with order flow. I did have a bearish model that failed. I didn't take it. So, in part, I don't remember why. Was I clicking too fast? I think I clicked too fast. So, just curious. Let's document. I don't show you all the documentation I typically do for a day, but so here I took January 8th, right? So we got in charts, no take models. So there was a one short expense. I didn't take it though. What would have won? Nothing. Other notes, no news, one stage delivery, and then the delivery was bullish. I want to add another note. Put that up there. Other notes, the PA. So I really want to note like price action. Price action was okay. I guess okay. Bullish. One stage. Nothing, no setups. And that way I can look at this. I can come back and formulate a theme for the week. So there we go. First day, Monday. We have no trades for the 8th. So let's move on. So where are we at? We got no news today. We'll zoom out, check out the daily chart again. Or we'll start out, we'll go back to the weekly. So here the previous week tapped into this fair value gap like we were talking about. Just want to check to see if there's any. So there is weekly bullish SMT forming currently at these lows. So it's reasonable to assume that the low for the week is possibly in if we think about a weekly candle. All right, so from here, I'm going to assume that the drawn liquidity for today is the previous day high. So, and even what I'll do is I can put drawn liquidity for the week is previous week's high. All right, so on the 4-hour chart, we can see the 2 a.m. candle has no tail, didn't really sweep any liquidity. I'm assuming this is going to be in a reversal somewhere here in this internal range, somewhere in the midpoint of this box. I really wish that it would. One thing I haven't figured out is how to get it to use, it seems to be stuck on one of my drawing templates. Save drawing template as apply default drawing template. So I need to figure out the default drawing template. And I'll do that another time. I just wanted to do, pretty much I draw this box most of the time. So I know previously it saved it like this. So I'm imagining price is gonna come down into this gap and then continue on. 1-hour chart, all this trend line liquidity looks like it's building up right there. And it looks like London took Asia's low, but then New York, pre-market took London's low. Look at all this trend line liquidity down there. So let's find 12 a.m. You can also see 12 a.m. Open right there. So longing back to 12 a.m. makes sense. And mark 9:30. Okay, come on. There we go, little fella. So let's start clicking. Oh, I wanted to check to see. No, I'm going to wait till the 9:30 open. All right, this isn't, I like seeing this. What we can see is pre 9:30, and as we have this accumulation range forming right there. All right, so 9:30. Just want to see ES and YM. Okay, so we can see here on the 1 minute, they're kind of doing different things. And what I've seen a lot in the January month is 9:30 opens and just blasts off. It forms like an order block, which is technically here or here. I don't have an order block 9:30 model. Okay, I don't really like these candles. So you see how wicky and large wicks and tails on these candles. Here's an inversion right there. 943, it's outside of the macro. I also don't like these inversions. I want to see a V shape. I don't want to see all this consolidation. I'm more bullish than anything. So this candle swept these relative equal lows. I still don't like these candles. So here we have another inversion. Or not quite. Maybe a close above. Not really. Going out to the 1 hour chart. Don't really have any levels down in here, so I'm not seeing anything I'm interested in. Notice how price is building trendline liquidity right there. It didn't sweep these lows. It left all these relative equal lows. So pretty much we have just an opening range like this. And I'd like to see price move away from here. Okay, we got some movement. I wasn't even paying attention to ES, remember? I switched over to seeing the 3 and then I switched back. So here at 9:45, looks like ES did the thing I was looking for. Same thing, YM did the model right there at 10:08. So here there was an SMT, which is why it didn't come for these relative equal lows. But there's just nothing in here I could consider a model, so I don't feel like I missed anything. Delivery's bullish back to 12 a.m. like I expected so far. So there's probably going to be no trade for me here today too. Or at least in the next hour. Unless I'm not paying attention while I'm talking, because it was right there. 15-minute gap. Right there. I feel like I'm not, so a close above would have been this candle right there. Was there any SMT? I might have missed it. Let's look at the 15-minute for more clarity. No SMT, but there probably was SMT down at this low. Let's check that out. So there is SMT. We have NQ and YM forming opposing lows. Okay, so there was SMT. This move was backed by SMT down in here. However, the continuation move did not have SMT. It had 5-minute SMT. So that is arguably on the fence. I'm going to consider it I missed it. So all right, so it did the retest. It's taken these equal highs. I would have gone, it's 3 R's the target. We've gone to 1 R. I would have gone break even. Bummer, I missed it. I don't know. It still could break even, but I missed it. Just clicking, I wasn't paying attention. I was talking. I was just saying, as I was saying, I don't think I'm going to have a trade for another hour. I saw it. And that's what's interesting sometimes. Like, you know, trades are like trains at a train station. There's going to be another train coming. But what sometimes we don't know is when. I've noticed on average, I don't get trades more frequently than about once an hour. More likely I get 1 or 2 a day. And sometimes I only get a good setup every couple of days. So it's kind of like this range. And on a rare occasion, I'll get a setup like every hour. So just knowing how frequently your setup appears is also helpful. It just helps manage expectations. All right, so I'd have been out at break even. Which it's consolidating. And it wouldn't have, oh man, tough call, because I would have put my stop, had I not gone break even is what I'm evaluating. I put my stop right below the body of this candle, it might have gotten me by like a tick. And still just kind of consolidating. So TP would have been hit there. So who knows? But the way I play it is a few candles after expansion to 1R and go to break even. So there we go. And 12 a.m. right there. All right, so drawn liquidity has been met. Looks like 1150-ish, 1150 macro. And pretty much call that a session. So still no trades. Let's go look at the PM session. Um, all right. So here's pretty much our lunch session. Noticing these equal lows right down below. Noticing a lot these ugly inversions. So here's one right here. 2 minutes before a macro, it probably came down into a gap. So there's a 15-minute fair value gap. Um, okay, so here, this low. So there is bullish SMT down at this low. It tapped into a 15-minute fair value gap. It has, so this is where like it's 2 minutes outside of macro, but it's not perfect. I don't like to see this consolidation in here. I would rate this as a setup, a B setup, and I wouldn't take it, but we'll tape read it anyways. In this situation, I typically would probably run a stop loss like there. So I'm not taking this. We're just going to tape read this. All right, I would have gone break even. And tapped out of break even. So it took these relative equal highs, formed another pair of relative equal highs, came back to break even. This is another theme I'm starting to notice is these setups are not giving my full 3R in January. So that's kind of valuable. Maybe I should write that down maybe as a note. So here we are, 215. Guess just keep going. Okay. 30 after. So, there's a volume imbalance and a little tiny inversion right there, but nothing I like. Three o'clock. Similar kind of thing. Here's a liquidity sweep. Here's another inversion, close above. So the 15 minutes consolidating, we can see the kind of barcode on the 15. That tells me to stay out. 1 hour, not really going anywhere. So I'm not going to look at any more candles on today. So what do we see? We saw ultimately 2 break-even setups. So here we're going to do, I was in the charts. I didn't take model. 2 break-even longs. Was it 2-stage? No. Sort of, yeah. It was more 2-stage. Well, the open, but the whole day was kind of 1-stage delivery. I don't know how to classify this price action because it's not normal, but it's not terrible. And there's some deeper retracements. I'm just wondering, like, is there a way for me in my head I can classify, like, here we go. I'm gonna say I'm gonna add something to my spreadsheet here. So what I want to measure is my performance, or like my judgment. Did I avoid the bad trades? Did I try to take the good trades? If I took a losing trade, would I take it again? So I don't know what to call that other than just performance. I'm going to give myself an A. I may change it to a number system so I can better grade the week, but so just give myself an A, you know, like I did a good job. All right. Because that's important too. And I really think people underestimate, like everybody thinks trading is this, like right here. And that's what a monkey can do. What a monkey can't do is this, what's on the spreadsheet right here. And this is what's really helped me excel as a trader. And thinking about these things like, okay, cool. Like most new traders be like, oh, it was a crappy day. I didn't make any money. And oh, 2 crappy days. I didn't make any money. And that's not, trading doesn't work like that. Like these were low probability days and I didn't see anything I liked. Did I perform well? I performed the best I possibly could. I didn't tilt. I didn't take things that weren't mine. I didn't chase price. I didn't FOMO. I kept my emotions in check. And this is the most important thing. A profitable trader judges their performance not based off their P&L on the daily. Sure, in the long run, over the months, you want to see a positive P&L, but on the daily, it's more about your performance. Did you act like a professional trader? I did this day. I did this day. So, all right, so pretty much nothing there. So keep moving. And we got 12 a.m. we don't need. So this daily draw on liquidity was met. We still have a weekly draw on liquidity to meet. So I guess I can remove this. I'm going to take the daily off. I'm going to lock the weekly for now. And yeah. All right, start of the next session. Let's go back to the daily chart. right, so on the daily, still have this weekly draw on liquidity to meet. Here, it looks like the overnight session swept the previous day high. Here's this fair value gap. So there was a bearish SMT formed between these two candles. Yeah, no, just barely. So looking for a bearish SMT here. No, not between ES. And there is so far a bearish SMT forming with YM. Let's go to the 4-hour. So the 2 a.m. candle did. So we'll take a we'll look at that in a second. I want to look for SMT. Not on the ES. And between these highs, we do have SMT on with YM and NQ, bearish SMT at a 4-hour level, which would make some sense to come back down into here or even down into here before continuing to the weekly draw on liquidity. You know, we want to see 50% of this range possibly. So the 4-hour, this 2 a.m. candle did stop hunt this candle here. We do have a gap on this 10 a.m. candle, which the 10 a.m. candles are important too. The 10 a.m. 4-hour candles. We have this gap here. Ooh, nice. It actually remembered my preference to save the drawing template for the gaps. Great. So to the 1-hour chart. A couple tiny inversions right here. We can see price inverted this gap. Liquidity's below. So I'm imagining I would like to see it trade down for 930 and then up. So here on the 15-minute chart, London has a big range. That can sometimes indicate lower probability New York session. London took Asia's low and Asia's high. That can indicate a lower probability New York session. We're back to the 12 a.m. And there's no news today, Wednesday. So let's start clicking. So I'm noticing already, see all this trend line liquidity here? Noticing that. We do have session lows right here, which are important. Takes a session low, forms an inversion right there. Could it be? I didn't take the full low. I would consider this the low. Is this the manipulation? Kind of dug, not what I would like to see, unless ES and YM look different, but let's go back to ES. Not really. $930 blast off. So look at how it's taking this trend line liquidity that I marked out. Was there? Yeah, I'm noticing like here would have been if I say I traded pre 930. Here's the setup. It hit 1R, tapped mountain break even, and continued. So just noting in January, these are deeper retracements, and maybe my break-even method might not be great for January. Let's see what happens. Consolidation. What's YM and ES doing? ES is bullish too. YM is So they're all in sync. So this is likely the move. We do have a couple of 15-minute gaps. Boom, wow. So now what I'm seeing here, maybe this, even though the assets were in sync, maybe this is the Judas, the fake move, coming down for lower, where the long will happen. Oh, so here's a close above this. I'd be curious to see, so nothing. All right, so came back down into this tiny fair value gap and this volume imbalance. No 15-minute SMT. We can see NQ is the weaker asset. So we can even see, like in this swing here from this low to this high, we can see that NQ dug down the deepest, taking most of the liquidity, where ES was probably the strongest and YM was probably nearly the same or slightly weaker, but I don't have anything to do here. So good call anyway. All right, so we do have this inversion after sweeping this low, which finally sweeps the session low, London low. And we have formed bullish SMT. I don't know if we've tapped into the levels I was interested in. No, we haven't. We took a 1 hour, it took a 1 hour low, but it didn't come down into that gap. Took a 4 hour low. Like, I'm interested in the long down here. Look at that. So this just didn't meet my trade criteria. Well, I guess. I mean, I guess that's a little. I can trade both ways. I say I can take it if it takes a swing low. It doesn't have to have a gap, but I really like them to have the gaps too. So I don't know. So there would have been a 3 yard winner. I'm gonna call that a trade I hesitated on. That was legit. So I'm gonna track the trades that I hesitated on, and I was hesitant, and it was a winner. It had January 2nd week, and it had no fair value gap, but session sweep. So it's starting to look like some of these, 48% of these trades I hesitated on are winners. That's a high enough win rate that I should be a little more liberal in my trading for now. So, but it's also got seek and destroy vibes just a little bit. So it's not the worst time to be conservative. And I'd be curious what my data says. In TradeZella, I track my trades that have no fair value gap and just a liquidity sweep like this, versus usually what I like to see is a significant liquidity sweep into a higher time frame fair value gap. Like this, a 1 hour, call this a 1 hour fair value gap or a 4 hour fair value gap. So I kind of have this double confluence of a session liquidity sweep and the gap. So that's what 90% of the time, that's what I take. On a rare occasion, when I feel really good about it and there's no gap, I will take just the liquidity sweep as a confirmation. All right, don't like any of this. So go to the 15-minute chart. And I mean, 15 minutes okay. All right, let's see what's going on here. So call, sure, whatever. Doesn't really matter. There's a bunch of lows down in here. This is kind of the lunch session here. Price is just kind of floating up. Consolidating. All right, 330, nothing for me. All right, so what happened today? We had one trade. Well, let's look this up. I'm gonna. So there was one. It might have been a 1050 long. I don't one. So 1050 long. No take. It wasn't perfect. And it's just bullish one stage. P is okay. So I'm noticing here that, deeper retraces, not many models present. What's my performance for the day? I think I can give myself an A for today because I was hesitant and it didn't meet all my criteria, and I took that in mind. Now, I can't just use, I performed flawlessly every day this week and took no trades. Like that's, you start doing that for a couple weeks and then you need to think about, are you judging yourself correctly? So if this was a perfect trade and I missed it, I can't say I can't give myself an A. But given that there is this major requirement that I really like to see in a model, I'm going to give myself an A. Maybe I give myself an A plus for these days, and then I give myself an A for that day. Because I could have been a little more ballsy and taken it. Yeah. So I forgot to mark the daily draw on liquidity. Oh, look at that. So Thursday's news hit the draw on liquidity. CPI and unemployment claims. So that's the weekly draw on liquidity. Interesting. So Doesn't have to do anything more, but ultimately I would expect, you know, this to be the next drawn liquidity. And we'll go to the daily. So we do have a daily fair value gap right there. I'm gonna go to the 4-hour chart for a minute. So it's possible. Still waiting for an internal retracement before taking this all-time high. Going to ES. A little stronger, and it's coming for these equal highs. I actually want to see all of them. We do have a bearish SMT forming with, no, we don't. No, we don't. Or, well, hard to tell. This isn't quite the right swing. There it is, this swing. So yeah, there's bearish SMT with YM. I would expect that just to send it into a retracement. I wouldn't expect it to reverse it altogether. So back to the daily, I guess. So really my drawn liquidity for the daily is up here. And I guess I could just move this one because we know that that target was already hit. So we do have this daily fair value gap volume imbalance, currently rejecting it. We do have bearish SMT on the 1 hour. So what I'd like to see is there's a 4-hour gap right down in here. So I could potentially long from this zone. So I'd like to see 930 open, low, high close. So let's go out to the 15-minute. Actually, I guess I skipped that part. So we just took London high was taken, Asia low was taken. There's no news, it already happened. And we do have this news high still intact and this low. So those are significant levels. All right, let's click forward to 930. Okay. Back to the 12 a.m. open. Just kind of floating, formed an order block. So I don't really want to short this, but it looks like a short. So we do have bearish SMT. I don't like the news high being intact. It's outside of macro. We'll just tape read this short. I don't think I would take it. But it's outside macro. I have a long bias, but it fits my narrative. And that's why I would consider it. And what I mean by that is I want to see it trade lower down into this 4-hour fair value gap. Like that's what I want to see. I just don't like how it didn't take this, and it's outside of macro. So I'd consider this a B setup. And look at that. So I'd have been break even. Oh, that's 3.5. So 2.9, 2.999, 3 Rs right there. All right, so that is a B setup right there. Does it fit enough of my rules to call it, consider it? It's not perfect. It's outside of macro. That's a tough call if I want to include that with the trades I hesitated on. I will. I'll include that as a trade I hesitated on. All right. January 2nd week. Outside of macro by 2 minutes or 3 minutes, I think 3 minutes. It was against bias with narrative. High probability liquidity above. High probability liquidity below stop loss, above stop loss. So 50%, it's definitely climbing. And let's keep going, see what happens. All right, so there's this low being swept. There's some nice movement. But now we have a problem of two huge gaps. All right. So it swung way past this 4-hour fair value gap. There's no 1-hour gap. There's no daily anything. Here we have some relative, I want to say a little bit of trend line liquidity. We have 2 points. There's not 3 or 4, but there's definitely 2. And we have all these gaps right there. So like, you can't really long above this gap. You could call that a 3-minute. Is there SMT? We do have bullish SMT. On the 1-hour, ES is really close to those lows. YM taking these equal lows. $15-minute 10 o'clock candle was a C1. This looks like it could form a C2 in the 10-15, but it's not. There's no confirmation. 5-minute gave a C2, so here's a 5-minute C3. And this gap is not very big. This is a tiny gap. So a little bit of a consolidation. I don't like that. Here's a tiny gap. There's a volume imbalance. There's a tailless candle. This is just a B setup. It didn't even take a 4-hour low. It didn't take a session low. It took news low. Maybe it took an old session low. Not really. Here's New York AM session low. So it took news low. It didn't take session low. That is definitely like a B setup. This gap here is just, if this gap was bigger, maybe I would consider it. And what does it do? Let's find out. 3R. Dang-a-lang. So, or probably 3R. Yeah. So there's another one. So what do I call that? Like, it had no. So I was hesitant on that one. It was just a B. You know, these are all B setups. January 2nd week, no higher time frame fair value gap, local devil's mark. No major consolidation internal to the model, small IFVG. Like, there's a lot of reasons right there not to take it. I'm gonna add something else to it. Local devil's mark plus trend. It's just not perfect, but it played out. All right. So interesting. So, oh, look at that. Came back and would have tapped at break even. Still deep retracements. At this point, I'm just clicking forward. I don't expect to see anything in the AM session. We'll go to the PM session here in a minute. So it was a 3R, retracement. It was against order flow, essentially. And this is where the trade was a little bit more of a gamble than anything. This was pretty dang clean. This was a more probable trade than this trade. So here's kind of a breaker. And whatever, we'll just go to the 15-minute chart. Let's go to 130. All right, we'll consider that the lunch low, and the lunch high just kind of short-circuited. So that breaker worked. You can see there's a super deep retracement into this bullish breaker. And all right, 1:30 p.m. Let's just see what happens. 230, just kind of floating and consolidating for now. Right here, 250. This closed right there. No 1 hour gap. No, there is a 4 hour gap, but I'm not bearish on this at all. I'm bullish. I wouldn't short this at all. And so 4 o'clock. All right. So interesting. So 2 setups today. One I would consider hesitant on. One was just a B setup. Not enough was right for me. So outside macro news high, long bias, but fits narrative. So you can see my long bias played out. I wanted to see it come down into this 4 hour fair value gap and respond to it. It came all the way down. So I said this one, I think I said, or this one, but ultimately came back down to this one and responded. There was no model for me at that low, or it was during lunchtime too. No, it was 11. It was 11 o'clock. But there's no inversion. Maybe there was on a 2 minute. I don't know. No 2 minute inversion. So I didn't have a model to get into that. So this is what I consider like a tough day, because it's like you were right but wrong. You know, I was right but had no model, and here I was right but wrong for not entering. Here I was right but right for not entering. I just didn't have anything that really kind of worked for me. Well, let's think about that. I'm going to think about that. So there were two W trades. And one was 1 times A, but hesitant. 1 times B. So I wouldn't have taken a B generally. So, oh man, this is tough. This is tough because like a part of me wants to give myself a good grade for being conservative. The other part recognizes you can be too conservative. I guess really the question is this trade. Was this trade an A+ opportunity that I missed? No. There was news high above. So I can give myself an A for today. I can't give myself too many more A's when I miss trades. And this is where I can add a row that I can call, like missed opportunities. And by this, I mean, if I didn't take a trade, so I missed losing 1 R. There was 0 R on this day. I missed 1 R. I don't remember was that so I missed 1 R on this day. I don't remember the day before. Let's take a look if that was a, and I try to, this is like I'm working this out in my head real time, because what do I want to count? You know, does this count? Was this a good enough trade? I don't remember it, and I wasn't tracking that because I'm not going to count this as a missed opportunity. So I don't 1050 win, no take. Let's just go take a look at it real quick. On Wednesday. Oh, right. It didn't have a higher time frame level. That was clean enough that I am gonna count that 1R. So then I can see at the end of this week, you know, how many R did I miss out on? You know, when I do like this, I'll do sum, and so this would have been a red trade. This would have been, you know, break evens, one win for up 3R. Or excuse me, that would have been 3R, 3R. So I'd have been up 5R if I would have taken those two. All right, so now that's helpful. Let's continue on. Clean up these charts. And let's go to the next day session. All right, so here we are on Friday. I don't think there is news, 8:30 news. Doesn't matter, it already happened. Looks like it's right there. Let's zoom out for a daily chart. So the daily formed a closed below this high. So that's a slightly bearish signal after tapping into that gap. So we have the previous day low and the previous day high. I am going to pick, let's look at the other charts too. So YM is kind of consolidating. There's no SMT. There is a bearish SMT here. I feel like this is going to be a breakaway gap. We have this volume imbalance. So we have any bullish SMT? Not on the daily. On the 4-hour, let's check. So we do have what's going on here? This low is that low. No bullish SMT internally. So there must have been at that low. I didn't check that, but yeah, there's no bullish SMT. So I'm still gonna pick previous day high for draw on liquidity. Kind of going along with the bullish bias and internal retracement. I'm assuming that's a breakaway gap. I'm assuming this to be a breakaway gap down in here too. Just these trend line relative equal highs up in here. So on the 15-minute chart, looks like London took Asia's high and low. So that means we could but be mindful of the possibility for seek and destroy. And so here I'm kind of imagining that this low down in here. So let's look at the 4-hour chart. So the 2 a.m. candle didn't do much, but the 6 a.m. candle with the news did sweep a bunch of liquidity, came back down into this rejection block here. It all fits with a bullish narrative. Let's just click forward and see what happens. Or bullish bias, the narrative. How it's going to do it, I'm unclear on. So 9:30 is one stage. Or pre-9:30, excuse me. So we have the news high. We still have the news low intact. Actually, I want to note that. Even if it goes for it, I really don't have a trade. Here I don't really have a trade, nothing to do. Price is just floating up towards the drawn liquidity so far. Oh boy, oh boy. I don't have a trade in here. Now this is interesting. Came back. So I don't have a 15-minute gap. Oh, I do have a 1 hour right there. So we have a 1 hour gap. Do we have any SMT? Sorta. It's not perfect, but pretty close. Close enough that I might consider it. So an imperfect SMT. So here's this right here. Took a 1 hour low. It took a 1 hour low. In a 1 hour fair value gap. Will this 1 hour? It's just so close to confirming SMT, but not. And I don't really have a rule about that. They all took this 1 hour low right there. All right. These two dug in deep, but ES did not. And that's so not a perfect SMT. We have so we have some local trend line. We have the previous day high. We have equal highs above. I mean, I might call this one, it's inside the macro. So what I'm going to do for this one, this is not perfect, but what I'll do is I'll just set a limit order like down here. And if it comes for me, great. What we're trading the big account. Yeah, so 20 contracts, I don't know. 40, 30, 35, 34, 33, 32. So we're going to set a limit order for 32 contracts right there. And stop loss is there. Close enough. So we'll set a limit order. Okay, limit order and stop. All right, one loss. So this was, here we had an IFVG We had a 1 hour fair value gap, 1 hour liquidity, and 12 a.m. We had daily drawn liquidity with equal. So we had high probability targets, drawn liquidity equal. Oh, right. This was the SMT was questionable. And that's the big thing on this setup. So oops. So here we have this SMT is questionable. And I can document this as, or I want to put this on the trades I hesitated, or I didn't hesitate. I executed, but I was hesitant. And I'm going to count that for his loss. All right, so okay, let's keep going. Oh, news low was below. I forgot about that. SMT questionable, news low below. So whatever. It looks like it still wants to go long, but we shall see. 11 o'clock. I just wasn't even paying attention. It can happen sometimes with backtesting. Like you just start clicking so fast, which is good and bad because you miss a lot of like the super small inversions. Like I missed this inversion clicking, but then in hindsight, I'm like, well, wait, maybe there was two right here. So here was an 1107 long. Oh man, that would have been a tough call again. This is same thing. I'd be like, dang, it didn't take this news low. So let's see what it does. And that would have been a break-even trade anyway. And see now, like I see that nice gap there, but it hasn't. This right here, nice gap, but consolidating hasn't taken this news low. $12 cool. So let's go to the 15-minute chart. We'll zoom out and go forward a few candles to the 1:30 time window. So look at this 15-minute. This is ugly. So I'm not going to even look at this PM session. $15 just barcoding. So I'm not interested in that. The 1 hour is kind of getting wonky. The only thing I do want to see is maybe where the draw on liquidity ended up being for the day. Probably would have been no trade. So here we are at 3 o'clock. The draw on liquidity did not get met. So, all right, so let's wrap this day up. There was one, let's see here, what happened today? I had one setup and where was it? So let's see here. Let's see here. This is 2024. So I took a loss. And this trade was in, I'm going to give it a B setup. Bullish, bearish, and sideways. So the missed opportunity, I took it. I'm going to minus 1R. So really what we can see at this week is I'd be up 4R had I taken these trades I was hesitant on. And just by like the way the cookie crumbles sometimes, like the one trade I took was a loser. Now, I could have thought about I could have maybe taken this one and this one, and I could have been down 2R, while missing this positive 6R in the middle. And that's just the way that it plays out sometimes. Not many models present. Mistake. So I took a B setup with questionable SMT. I give myself a B performance. I didn't tilt, didn't FOMO, didn't do any of those kind of things, so one loss is not a bad deal for the week. So, all in all, I still give myself an A for the week. Any other thoughts on price action? Let's take a look. Let's just zoom out a little bit. Let's look at like the 15-minute chart. So I think the theme I'm seeing here is, deeper retraces, not many models present, more B models than A. But price action was definitely cleaner than first week. So, what was my then, consensus on the second week of January for 2024? This is a tough call because if I don't take B setups, if I don't take the B setups, there were pretty much no trades. So there was mostly B models. So would have been green taking B setups. There was only one A setup. Well, I don't know if that's totally true. I needed to maybe document if they were A's or B's, but the ones on the 9th here, were they A setups? We'll call it only a couple A setups. All right, so I'm gonna wait to see what I see on the other second weeks of January, and see if there's a similar pattern there or not before I kind of come back and say if I'm better off not trading the second week or what, or just reduce your expectations. Quality of setup, I don't know. I'll come back to this. And I'll find out. I want to dive into the backtesting the second week on the other years. I realized I forgot to show the ending P&L. So So far for the year of 2024, January, down 1R for the first week, down 1R for the second week. Could have been up 5R potentially had I taken some of the B setups. So that's down 2R on the account, which totally fine. 2 losses in a row is to be considered quite acceptable. Doesn't bug me too much actually seeing minus 2K, minus 2K, because I know what'll happen to this account. The only thing I don't know is if January is really crappy, I'll just delete this backtesting set. Well, I'll probably keep it for data, but I'll want to keep going and just let the rest of the year offset it maybe. Ultimately, I'm expecting this to be more a break even or red month. So like I'm going into this expecting that. Anyways, I just wanted to end the video here showing what the weekly P&L ended up being. So